Hello folks, welcome to another Bitcoin market analysis by Inspocrypto. Well, I would say market analysis. I'm going to focus later on more to Bitcoin, but my initial comment is more a general topic. We will talk a little bit about global economy, streams, geopolitics, and so on and so forth. That's the idea behind. And we'll keep this idea. So today, as mentioned and announced last week, I'm going to finish the topic about the banking sector and its consequences of the monetary policy driven by the central bankers. Today, as also announced, we will talk about the situation and the conditions of the banking sector in the US. You remember I have announced that. So we will complete and finish all this series where we have talked about the situation in Europe, where some politicians have the idea just to rise the reserve rate of banks, or the minimum reserve rate of commercial banks, from 1% to 10%. Some others are talking about 3 to 4%. It doesn't matter, but that would have a bigger impact, of course, to the lending business and so on and so forth. And on the other side, we have talking last week also about the last announcements and speeches by different central bankers 2 weeks ago. And now, actually, it was estimated to happen Monday, but Monday I wasn't absolutely available. It was a really stressy day at my client, and Tuesday was holiday in Germany. So we are going to talk about that today. And as you see, the whole article was available on spglobal.com. That's a website that is providing very interesting information about different sectors of the industry. Also financial markets. Sometimes they are also talking about crypto, based on facts. So I really like what they are doing. So sometimes I'm spending some time just checking what they have there when we are talking about 2023 big picture US consumer survey results. Also very interesting and very important to have a sentiment of the next coming month and years. But one article was in my scope with the others two that I have already presented and last week. And this one is M&A drives US bank deposit gains amid broader decline. Now the first thing would be, okay, that matters. Yeah, that matters, because everything has a context, and we are going to talk about the context today. So why the monetary policy had an effect to the banking sector in the US, what should be the consequences, what could be the consequences. And you remember I just did a little teaser last week where I said they are pushing for a bigger consolidation of the banking sector in the US. That's exactly the same trend in the Europe as well. Something I'm not a big friend of it, because many central bankers and politicians think that that would minimize their risks. In my opinion, that's maximizing their risk, because it's a difference if you have a decentralized banking sector, indicating it doesn't depend by 1, 2, or 3 bigger actors, but you have you can share the risk, just spreading the capital of an economy to many different entities. What they are trying to do, in my opinion, is to push more and more the banks to acquire itself and just to become even bigger. And that's what in the US is coming even more clear than in Europe, where in Europe even politicians from Brussels are thinking what kind of mechanism they can use to push exactly to the same trend. Obviously, taking other arguments, but at the same time, it will bring the same results. So, what they call a consolidation of the banking sector means reducing the amount of different bank entities to few big ones. That, in my opinion, is not what we should have. But obviously, also something to mention, M&A, not only in the banking sector, is also to optimize something, to reduce the spendings, to increase the gains, their income. It's something that's very well known. And obviously you remember we had in the last decades a bigger trend in M&As, where other companies, bigger companies, started to acquire just other little companies with different products, modernized and very innovative products, not only to get their products, but at the same time to get more market shares. And that's it's very similar to what is happening to the US, where almost 50 of the biggest US banks in the last 12 months, that was at least declared in June 13th, were just if we check why that happened, I mean, what they are saying is that their deposits of the last 12 months just declined instead, and that's something obviously not a good indication for banks at all, because they need deposits. Deposits means liquidity. You remember the discussion we had a month ago where banks were yelling and crying to receive a source of liquidity, and the Fed automatically reacted afterwards. Why they didn't stop hiking or rising interest rates at the same time. But obviously, if you're getting money, but at the same time you are using this money to lend, that's a good thing. Bad thing is if the demand for the lending business is declining. So you have money, but you need to do something with this money. So obviously, it seems that something is changing in the banking sector in general in the US, and also their business model is adapting to the current situation. Means one of the things is to receive more deposits, they are using M&A, mergers and acquires. So means fusions. They are just acquiring, buying other banks to receive their deposits and to have them also in their balance sheets. That's one thing. At the same time, they are obviously receiving more market shares, because we are talking mainly about the top 5, let us say top 10 banks in the US. And that's obviously triggering such kind of market consolidation. Like I have mentioned so many times, even the German government pushed also, for example, the Deutsche Bank, when they acquired the Postbank, it was almost pushed by the German government to consolidate the banking sector in Germany as well. Obviously, when we are talking about 870 billion US dollars in outflows, that's what they recorded. That's huge. Well, it's not that huge, but it's big. And when we are talking about that, we need to talk about the consequences. What could be the consequences when banks are seeing declining in deposits, in liquidity, because that's obviously what we are talking about. Well, they have obviously, when they are starting to adapt to the current situation, they will use just different strategies. One strategy is gambling, just using the financial market to maintain it stable and to try to make bigger gains there to neutralize their, a weakened lending business, for example. At the same time, such a liquidity issue, if we are talking, for example, about potential liquidity issue, if we have less lending business demand, it will even more affecting the lending in a whole economy. Because it seems what they are doing to neutralize these liquidity issues, as just mentioned, is, for example, to use their money to get more liquidity to acquire other banks. Instead, for example, to invest, I don't know, maybe in marketing, maybe to reduce the interest rate for their lending business to make it more attractive, for example, or, even they have less deposits, but at the same time, do something in this direction. Instead, they are not doing it. They are just really looking away. And that's where M&A, it seems, it's becoming more and more a key strategy for those banks to grow in a challenging market environment, because that's what we are seeing at the moment. So the big four US banks all recorded a decline in deposits, while, for example, the US Bank Corp increased its deposits. But why? Well, just mainly because they acquired more than the others. And also the statistics are supporting this, let us say, theory, because even the total number of active banks nationwide in the US decreased by almost 1,600 banks compared to the previous year. So, and they are not just disappearing. They are not just, they are not insolvent. They are just acquired by other banks to receive their liquidity. So they are pushing to something that led at the same time consolidate the market, as mentioned. And we know that bigger banks, they are trying to push more to a digital transition, indicating, digital banking services. And that's something we are seeing that since a while. Obviously, we could say, even little banks are doing it, but usually little banks are more conservative. They are much more located in towns. They have more this, social factor. They know their neighbors. They know their customers, sometimes even by names. And big banks don't do it. They have other different processes, and they are looking obviously for other business, scalable business. And that's a different thing. But at the same time, it's also indicating that this could change the way customers will interact with banks in the future. And that's something that's, in my opinion, even bullish for crypto. Like, as we know, digital money, blockchain, and so on and so forth. So not everything here, that's a transition. That's what I have mentioned in 2021. It will happen, and it's going to happen, is obviously a little bit different. I was talking about the banking consolidation trends coming from politics or politicians in general. And now we are seeing also the consequences. We are now seeing the results, the trends, how they are pushing exactly to that, to that direction. But is that something where we would say everything is great? if they are focusing less to, for example, to the lending business and using this money to other kind of investments, what does it mean? I mean, without lending, it means that every single company needs its own liquidity to keep working, to make investments. Not only the interest rate, so every single credit is more expensive than just a few years ago. And it seems it's not over. Also indicating that this is going to be also a big challenge for the economy at the same time, because the big boys are not using and focusing on the lending business anymore and trying to focus other different strategies to neutralize the weakened business, lending business, where obviously with the rising interest rates, usually the demand declines. That's absolutely normal. Just to talk about different other, even some shadow banks where they used to work with bigger banks, for example, to make bigger investments and to provide and offer these investments then to their own customers based on funds or whatever. But the initial liquidity usually were coming from banks, for example. So we are talking here, it is, I wouldn't say that's a liquidity, nothing that we should see any panic soon, but if that keeps in that way, if we are still receiving, because central bankers are still focusing 2% inflation, I mean, with an oil price that's rising, where even Saudi Arabia is telling that we will have less money in the future, that's fine, as long as we maintain a high crude oil price. So they are calculating already that they will cut even, it seems, the crude oil production in the future to maintain the price up. That means obviously we will have a bigger problem, because we are almost at the beginning of the green agenda. So that will take time. That's a transformation that usually takes years. And obviously, a decline in deposits also means a reduce of confidence to the banks, to the whole financial system. And now, just imagine we are consolidating the banking sector. So we are bringing more power to less hands. And now imagine something happens while, a significant decline in deposits could happen, so something like a liquidity crunch. What will happen with the confidence? Just try to save just the top 5 banks in the US. We had one example, but it was a different time. Even the governments were in different conditions than we have today. So it's going to be very exciting. And as we know, and I have mentioned that about, lending by banks, less lending, less investments, and usually that has always an impact to the economy. And usually the pace how it grows, or even maybe if it's going to grow or not. Maybe the economy is going to decline, something that I'm expecting. So also something that's not going to be absolutely good. And as just mentioned before, the digital transformation is going to play here a bigger role in the whole thing. Because one thing is M&A. Another thing is to create artificially, it doesn't matter at what way, liquidity. And the other one is to reduce the spendings. And to reduce the spendings means to accelerate the digital transformation of the banking sector. And yes, that will have global implications to the job market. And that automatically will have bigger consequences to the economy as well. So as you can see, what we are and I hope you can see that with all these three topics we have talked and discussed about, is that in Europe we have a clear and sharp view what politicians have in mind, and that's very similar of what the Fed in a different way is doing in the US. And it seems, I'm not sure if they know what they are doing. I'm, well, absolutely sure they know what they are doing, but sometimes I hope and pray they are just not that smart like many think. However, let's just talk about Bitcoin. At least crypto is also my hope. So let us go forward. So then let us see what the market is showing us. We can see that the weights ratio 1 day time frame lifted up after it was extremely low. The price pushed up, then also the weights ratio lifted up, the price started to decline. Once again, I mean, it's only my personal opinion. You can take it or leave it, but it's distribution. It's pure distribution what they are doing. It's just to let the price go up to distribute afterwards once again. The weights ratio 30 days moving average, as you can see, is still in a declining phase, usually just indicating that we are going, it should bounce very, in my opinion, we can go a little bit more down, then it starts to lift up once again. That's usually the bottom, but we need to see, it's just too early. If we check here, for example, we see that, you remember when I said, if we see that, usually the price goes up, but at the same time you can also see what the weights ratio 72 hours moving average did. It touched 90%. That was actually here, and then afterwards the price started to decline, and that's also something really usual. At the same time, the stablecoin reserves on centralized exchanges declined a lot here, so also indicating from here to here we had more stablecoin reserves on centralized exchanges, indicating more deposits. Then they started to decline a lot, indicating a cash out. Now someone, or maybe even, and I think exchanges are playing here a bigger role at the moment, receiving more stablecoins. I mean, Ether or Tether. Tether is back in for this year, as I mentioned, in their lending business. So create just a Tether from thin air, and obviously it's a good opportunity to push up. But they said, at least we will see if that's true, they will stop with their lending business at the end of this year. What will happen with the market then? Anyway, the 72 hours moving average of the weights ratio that lifted up, declined, lifted even more up, is declining, and we need to see if it's starting to push up, because usually then it means more distribution will happen. As you see, it doesn't automatically indicate that the price will down because of it. In my opinion, it will, but it seems once again they are looking for upper prices to distribute, and the market activity is so low. I really don't get how they can still make money with that, but it is. It works. Maybe it's only an exit strategy. I really don't know. I mean, ECC is delaying any spot ETF decision like we have seen in 2021. Nothing have changed. Really nothing have changed since 2021. I mean, few scammers last in the market. Well, no, some others had its come back already. So, but Sam, at least, if it's true, and he can get 115 years, then I think we will not see him again, only if they allow any PC or notebooks and trading opportunities in jail. Also possible. So we will see. Let us go forward. So now let's talk about liquidity, or at least any kind of flow activity related to the market. We can see that looks red. Well, it is red. Oh, and that's white. That's not my color, but it looks red. So we can see the monthly flip back to red, almost 10,000. We had almost 11,000 just a few hours ago, indicating they're absorbing step by step. Anyway, even the 90 days rolling, it's indicating that it's declining a lot, and usually afterwards it should flip to red. That usually afterwards, and that's why I'm expecting the weights ratio daily base or daily time frame will start to lift up again. It will bounce because it's then indicating a bigger preparation will happen that then afterwards can trigger a bigger sell off, like we had here from almost 31k directly down to 25.5. So, but at the moment it's just declining, also indicating us that they are buying less. If we take a look here, for example, that's the 30 days rolling, but in my opinion, as you know, I like the H4 and the H1 because it's short term, it gives you a better view. If we check that, we can also see in sequences, price push up, they send more Bitcoins to sell. Every single time. Before they push up, they send more Bitcoins to sell. And that's almost always indicating they are doing it more and more and more. I mean, they pushed up. We don't see any huge outflows coming from centralized exchange, indicating that we received a lot more Bitcoins too. It was negative, it was a positive, so we received, well, it was negative, as you can see, it's a minus here. It was negative, so indicating the net flow was green, as you can see the bars, but after such a move, the bar should be bigger than this here. Also here indicating that at the same time they send more Bitcoins. And to be honest, that looks extremely like distribution. It looks like distribution. That's what they love to do, just to distribute, to hide their distribution. Push up, trigger a little bit of FOMO, create demand, artificially start to sell. Sell, 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 go down, buy a little dip, but they are mixing it. The currently little dip with the old reserves that they bought maybe at 10 or 15 or whatever. And that's what they are doing. So yeah, in my opinion, that's what's happening. You can see here, for example, they sent at once almost, I don't know, 15,000 Bitcoins, and then they sold them. The question is if they sold at all. It doesn't look like, because we can see that the Bitcoin balance on centralized exchanges is it lifted up. It's maintaining, indicating they didn't sell all of them yet, or buyers didn't withdraw them. If we check this here, we can see once again we are receiving 350 millions in crypto, but we have a withdrawal, an outflow of 280 millions in USD. That's fear, and that's once again a bearish balance, because it's just indicating they are sending crypto to sell them and to take and swap them to fiat. The last 12 hours, BTC 470 millions in, 290 millions out, but 550 millions out as well. So also here indicating, yeah, it is, the delta is less, because 440 to 550, it's a delta of 110 millions, but you can see it's still bearish. We have a neutral fear and greed index. It's almost 50 at 49, while the price just lifted up a little bit. It's still working. I mean, crypto is always, I mean, no one would stay here if we would know that this market is just going to disappear in a few years. Oh, some of us would maybe go short, but the question is where. because I wouldn't go short on Coinbase, I wouldn't go short on Binance, I wouldn't go short to any of those centralized exchanges, because if the market will crash, they will crash as well. So that's the big thing. So the hope is still up only, and up only doesn't work, and up only in the current environment, it's not looking great. I don't care what Larry Fink is saying. You know, he changed its opinion like the wind, and usually this is nothing that holds long term. But anyway, also here, it's just my opinion. 24 hours, 240 millions outflows from Binance. 1 month, 800 millions. If we check, for example, the spot volume compared to the open interest, it's still indicating open interest. It's just more than spot volume. Even 3.5 millions is not that bad, to be honest. We had even less. Bybit with almost 1 billion is not bad at all, while Bitfinex with 610 million, it's, well, we can see here 600 millions spot volume to 3 billion open interest. That's really a crazy ratio. Or 60 millions here, for example, on Bitfinex. Oh, that was OKEX. Crazy. OKEX is the second one now. Wow, I didn't see that. But as you can see, 60 millions on Bitfinex to 500 millions in open interest. That's also crazy. So yeah, futures is mainly a huge part of the crypto market already, and it will become even more important in the future, in my opinion, as well. So if we check here, we can see that at the moment, based on unusual ways in the crypto whales chart, only checking the BTC, we can see we have sales of almost 55% to 45%. We can see that USD lifted up almost to 30% now, while TUSD, I'm sorry, wow. Now, and we can see that USD with 13.7%, for example, also lifted up a little bit, and BTC USDT 57% declined a little bit. However, Bitfinex with 30% versus Binance 70%. Binance recovered a little bit. It's still, of course, the king of the market, it seems, used by whales, but they are using a lot of USD. So yeah, we need to see where this is coming from. If we check here, and that's something I love to do, because one thing that's absolutely clear is Tether market cap up, Bitcoin price up. That's a rule. That's how it works. If we check TUSD, it looks different. It really looks different, but they love to push up with Tether. And Tether is, and if we keep in mind their rejection, main argument of the ECC in 2021 was market manipulation by Tether. Nothing have changed. It is still there. So yeah, let us go forward. So now let us talk about futures, and we can see that also here, for example, and now I need a different color, obviously, that the aggregated funding rate is lifting up, indicating they are demanding more longs. Open interest is following, is lifting up. Leverage ratio is following, is lifting up. Even the Bitcoin price is doing exactly the same, usually also indicating that they are supporting the price with long futures. Yesterday we liquidated almost 280 bitcoins in longs and 110 bitcoins in short, so nothing to see here. Now we go and switch to blockchain whispers. Let me just refresh the site, and we see that something have changed. On Bitfinex we break the 2.5 billions in longs. We even have now 2.6 billions in longs, and shorts declined by almost 50%. On Binance we have 60 to 40 still in favor of longs with 1.5 billions and longs versus 1 billion and shorts. Look on Ethereum 70 to 30%. Usually the market do the opposite and sometimes don't, as we know. So now we go to to Kingfisher, just to see where we have some high leverage positions, and we can see that everything at 26.5 and even lower could attract some, let's just say that directly, some exchanges to liquidate those just to receive all these liquidation funds. So 26,400 would be possible. Even the next one could be here at 24, and yeah, you see that we have here, we can push up to 28 first to liquidate them and then go down. It would be also possible, but you know, we need to see. That's it. Let us go forward. So if we go forward, we can see here what's happening. So first of all, we can see that 28k is what bulls are looking for. Actually, their support area would be 27k at the moment, as we are trading, for example, above of 27 and 27.5. It means they will try to fight down to lose 27k. While, for example, bears, those are really quiet at the moment, they are demanding 26k. So 27 could be a very interesting level, but at the moment I see that it's more in favor of the bulls. However, the GAX at the same time, it's almost at 190,000, indicating we should go more down than up, and that's mainly it. I check the last expiry of this year, that's going to be in December 29th, where we still have 27k usually, where we could maintain the price. The question is, I don't know if the time was right, just end of September expiry, because that's the third quarter expiry, also a very important one, why they were front running it. In my opinion, the expiry was at 9 a.m. That was European time, but I'm really struggling because they pushed up before, in my opinion, but maybe I missed something or I'm wrong. It's also maybe possible, I don't know. But in the third quarterly expiry, we had a max pain of 26.5, and then afterwards we pushed up to almost 28. It was even above of 28. Oh yeah, 28.8. Wow, 28.5. Let us say 28.5, and now we are coming back slowly to 27. So if we now check, for example, the strategies who are leading the daily option market, actually on Deribit, we are talking only about Deribit. We have bear put spread, bear call spread, bull diagonal spread, and custom strategies. Bear, usually bearish. We will check that. It doesn't mean that they are making a bet to 20,000 or 25. Maybe they are making a bet, and that's their bearish view. We are not going to push up above of 30k, for example. That's something we will check. So let us go here. We are going to start with the bear put spread. We have it here. We will check 6 pages. Usually it's indicating a lot of retail is trading here. I don't see anything big. For me, everything that's above of 100k, it's more interesting. Everything less than 40-50,000, it's that's mainly really retail. It's really nothing big to see here, unfortunately. I mean, these are the biggest here, where they are saying that until end of October we will see a price below of 25.5. here it's the biggest one below of 25 until end of November. Wow. Okay, so now we are going to check the bear call spread. It's also bearish, where we have 3 pages here. Also here going to look 46k would be, for example, interesting. And we can see they are making a bet. For example, you can see what's happening here, indicating we will see until end of November see a price below of 29. So their best case is to see a price below of 29k, for example. If we check here 25, they are even saying until end of the year we are not going to see a price above of 45k. We are going to maintain and even expecting a price below 35k. So that's what they are saying, but nothing huge. Everything looks more like retail. Obviously, we don't know. I mean, they are here, for example, 29.34, 29.34, 29.34. Looks like it's one and the same trader. If that's the case, obviously, we are then talking a little bit more about money. But look, they are selling, for example, the call 29k for 22k, and they are buying the call 34k for $5,000 or almost $6,000, indicating they are cashing out here. They are taking a profit of almost $16,000 for each trade. If we now go to the bull diagonal spread, that's here, and that's usually bullish, where we see, for example, here one big trade where they are indicating that we will see until end of November a price hitting 28k and even breaking it. It's not huge because only 100 lots each. They sold, for example, for 136k here, and they bought 95k, for example, the call 27.5 with an expiry of end of October. So also here nothing big. In custom strategies, it's really difficult to interpret because nobody knows what's behind, but even here you can see it's everything low. Maybe this one, and it's a multi-leg, so also very difficult to know what's behind. If we check here, they both puts 23k for the end of the expiry. They sold the call 27k, they put 27k for end of the year, and they both call 32k. Maybe it's indicating they are switching the strategy, and they are indicating right now that they are expecting to see a price range between 23 and 32 until end of the year. But that's pure speculation. Nobody knows. So let us go forward. So if we check that here, we see that BTC USDT pairs are declining once again with the price, obviously, only that the price is breaking here. It's going up at the moment while BTC USD pairs are not following. And if we check that here, not even BTC USD pairs, the only thing what is doing exactly what the price is doing are the futures, and mainly the Bitcoin collateral futures, more than even the stablecoin futures. Very interesting, isn't it? So someone is pushing up, and I can imagine that really miners are trying to push up the price to levels where they feel comfortable, because we have a declining market activity. They can do it. They have those Bitcoins, and so at the same time then selling and distribute. But once again, it's almost impossible to have any proof that that's happening. You need to track every single wallet, and you need to tag them correctly. That's almost impossible. No, almost impossible, at least for Inspo. So BTC USD is also here, for example, you can see doing very good, right? Just check the patterns here and you will see what they are doing. And just with TUSD, is Justin Sun the big bad guy? Because it's one of them. I don't like him at any time. So, but yeah, maybe it's possible. So if we check forward, BTC BUSD, well, nobody cares. I'm going to remove this chart because it doesn't make sense to me to check them anyway. Bitfinex declining more, indicating they are absolutely in distribution mode, and we can see what they are doing. I mean, does that look bullish to you? Usually it shouldn't, but well. That's Bybit with BTC USDT. It's really looking extremely bullish here. I mean, its CBD just lifted up with the price from 500 to almost 2,400. Let us say 2,000 Bitcoins in CBD. That's really big. But at the same time, Coinbase is doing exactly the opposite. And even more, we are talking about 2,200 Bitcoins with USD. By the way, that explains maybe why they are swapping. Bitstamp, for example, also lifted up. It's maintaining, and almost the same with Kraken. They pushed up, and everything looks like distribution to me. It looks like a really well synchronized distribution where they try to trigger FOMO by retail, at least those who are still buying spot with the hope it's going to be my main asset to survive what's going to happen and coming. You know my opinion about that. Someone asked when I'm going to start to accumulate Bitcoin. If I tell you at what price I will start to accumulate Bitcoin, you will unfollow me. So I'm not going to say that because it's not. No, I like Bitcoin. I like it. Even I think it's not what Satoshi Nakamoto thought when he initiated, but it is what it is. Okay, so I'm not going to accumulate Bitcoin. I have different other assets where I'm looking for, just because of the technology they are using. I have mentioned so many times, some others are describing those as shitcoins, like Fusion, for example. Even Ripple, I have said so many times, Ripple has a very solid business case. Even I don't think that it will happen any kind of huge impact to the XRP price itself. Wow, we have really extremely interesting tokens out there, but the question is if their business case will have any kind of impact to the token price at the end of the day, because that's the only thing that matters for you if you are accumulating or buying those tokens, for example. So I have talked about what's happening in the banking sector, what impact it can happen to the global impact. In my opinion, it's just to think that crypto is how to say that the only asset in the world that's going to save your money. I hope you will wake up. I really hope you will wake up before it's too late, because at the moment crypto is unfortunately a pure speculative asset. It doesn't have anything else, unfortunately. I can imagine that will change maybe in the next years. And I know that banks are extremely bullish on the technology behind, but less bullish on tokens in general. They are extremely bullish on create their own tokens, for example, like me as well. So once I said to one of my followers, the best thing you can really do at the moment is, if you have time and some money, is to create your own project. It doesn't matter what kind. It's not necessary to create your own token or ecosystem, but to create something that supports the community, that supports crypto in general, even to be much more adopted by people who are not really part of or don't even have a Twitter account. for example. So spread a little bit, you know. Also the advantages of the blockchain technology and everything we can do with it. Anyway, we go forward and we can see here that's what is driving the market. As you can see, I mean, I don't need to convince you because I think you can see what's happening, right? So they use just less shorts to decline the market because they distributed here, they just sold more spot, and afterwards they used much more longs to push up the price because they are buying less spot, just supporting their futures operations. If we now check here the funding rates, we see that on Binance, for example, they are demanding a little bit more shorts. BitMEX demanding more shorts. On Bybit, more longs. On Bybit, even with USDC pair, more longs. Deribit, it's neutral. Kraken demanding more longs. OKEX is neutral, only with USDC demanding a little bit more longs. If we check now the coin margin contracts, we see that here Binance, it's bullish, so they are demanding more longs. That fits very well. BitMEX is demanding a little bit more shorts. Bybit, obviously, on the long side. Deribit as well. Kraken a little bit, and OKEX as well. So everything looks like they are just, demanding more longs. On the coin margin contracts, it's where I sometimes think many miners are behind because they have maybe even other exchanges using, for example, their Bitcoins to trade on competitors' platforms. I can imagine they could use that, for example, as well, but also just a theory. If we go forward, we can see that, for example, here miners outflows, it declined here, then we had a bigger break, it started to decline once again, bigger break as well, and now it's declining. Usually then we see any patterns here, so they start to lift up, to distribute at that level. Even here as well, they push down a little bit the price, then they sent more Bitcoins to centralized exchanges, lift up a little bit, declined more, then did exactly the same here, as you can see, pump and dump, and so on and so forth. While I don't think that miners are the main drivers of this market, to be honest, but one of those who are distributing a lot compared to what the market in general shows in activity. If you check here, is that funds started to buy more Bitcoin from 683,000 now, almost 2,000 Bitcoins more since September 19th. If we go forward, we can see here, for example, trading volume ratio, spot versus derivatives, it indicating it's lifting up a little bit, also indicating a little more spot volume, but it's so low, indicating that the market is still in hands of the future market, and that's absolutely it. So if we check here, we can see that Coinbase, for example, Coinbase still at 33K, and they removed some liquidity to send it lower at 30K, for example. At the same time, we have here a lot of liquidity as well waiting. So, but nothing in particular changed here, only the CBD, as you can see here. If we go now to Bitstamp, also here, they triggered the sell order at 28, for example. Otherwise, they are still waiting at 26, or for example at 20, almost 30K, but that's mainly it. So really nothing to see here. BTC USDT, also here, I mean, they are waiting now at 30K, and also here with 440 Bitcoins waiting, there's some liquidity waiting here. But that's nothing. I mean, the market is becoming extremely boring. Now protecting here at 22 and even 20K. This market is, that's now people will maybe laugh, but it's not a very usual bear market in my opinion. It's yeah. So yeah, that's BTC TUSD. They moved up a little bit to 30k, so it indicating that it could be go up to 30k before more down. Even here, for example, with BUSD, we are at 29 and even also 30k, but it's BUSD. Bitfinex, for example, here they also trigger different sell orders, as you can see, and well, now also here nothing to see. Well, you can see what they are doing. They what is that here? Open interest on spot. That's really interesting. OKEX spot, BTC USDT, nothing to see here as well. Now Kraken. On Kraken, you see that they are also waiting at 29.5 and 29. They removed some liquidity now down to 28.500, for example, where it would make something like a double top before it goes down and protecting 26. On KuCoin, BTC USDT, for example, nothing happened. Really, absolutely nothing. In BitMEX, also nothing. BTC USD, also here we see that they liquidated here, for example, when they pushed up very hard. So it was a short squeeze in my opinion on Bybit. Now BTC USDT, exactly the same. Then afterwards they liquidated high leverage longs, I guess, but also nothing to see here. Now BTC USDT, where they are covering or maintaining here some long positions at 27k, a little bit to the POC here at 26.5, but also here nothing to see. I mean, well, BTC BUSD we don't need, but BTC on Bitfinex also nothing. Kraken futures only waiting here 26.5. OKEX futures 28.7. KuCoin futures also nothing. Just liquidated here a lot, but and Deribit is waiting here 28.3 as well, so it could be possible that they do that here and then go down or just push up. And to be honest, nothing has changed. I'm still making this analysis just to support you a little bit while we are working on Phoenicia, but this market is really not attracting me to trade at all. Really not. So yeah, we will see how long it continues. Many are still expecting a huge bull market in my opinion. Considering the whole environment at the moment, I don't see that, but we will see. Big love. We will see us Friday. I need, maybe with initial comment, depends. I need to make a research if I can find some really interesting topics. However, take care, trade carefully, and we will see us Friday. Bye bye. Your Inspo.